The Pulse School on realagriculture.com is brought to you by Saskatchewan Pulse Growers and Nodulator XL.
Calvin Hepner here with realagriculture.com, and we're joined by Marlene Boersch of Mercantile Consulting Venture. Did I get your last name close?
It's good.
Good enough? Okay. Yeah. Marlene, you're talking today at the Farm Forum event about the pulse markets, and let's start by talking about peas. You think that there's upside for pea prices in Western Canada?
Absolutely. We have had a very active year on peas. As you know, production was a little bit below last year, and supply certainly, around 300,000 tons smaller. We have had extremely good shipments into India during the fall. China has been lagging behind a little bit so far. But overall, per CGC numbers, as of last week, we are at 153% of last year's exports, and we had pretty good exports last year because China was front-end loaded at that time. So it seems to me that offtake for the first quarter is excellent for the first third of the year. And what that does is once we get into Jan, Feb, March, after Christmas, we certainly won't be sitting there with a burdensome supply. Also, farmers will be more than half sold. And so we anticipate India to come back into the market. And that's predicated on the fact that they had a smaller Kharif crop and could have also a significantly smaller Rabi crop than planned. And that should force them back into the market. Chickpea supply from Australia also smaller. And that should bode well again for peas. So I think we'll see prices increase. Once that happens, and I think we could reach the $8 level. Already $7.50 has been paid last week, albeit for small volume, but it's, in my opinion, a harbinger of what's to come forward.
Right now we're more in the $6.50 to $7
That's correct.
range. Okay. So $8 you think is possible?
Yeah.
Okay. What does that do for acres or for how peas pencil out for 2015?
Well, it depends what you take as a starting number for next year. And we had conservatively penciled in $6.50 a bushel. But I think we'll need to really look at what the acreage distribution is going to be looking like. Prices have changed this year, and so that takes a little bit more thinking and research in order to know. But I think there could be some renewed interest or some more interest in some of the smaller crops in general, like flax, soybeans, pulses, because the major commodity prices are a little lower. So we'll have to see as we go towards the spring how that works out in other countries as well. Focusing
on lentils, then you see upside to lentil prices as well, but maybe not as much as there is for peas.
Well, on lentils, following harvest and the concerns about our quality, lentils, we produce something like 55% of the world's production amongst the major producers anyhow. And when we had harvesting problems and came up with a very mixed quality blend, prices increased very significantly, particularly for the higher grades. So it's much harder to increase from there. We were a lot less conservative than on the peas. So I think particularly on the higher grades, realistically there's not that much room to go without losing a lot of demand. I think we should be careful not to let the lower grades go at very low prices, because I think we'll need all the volume. So I see a fair market forward, not soaring, but certainly a fair market for lentils as well.
And India and China are the underlying demand drivers for both these crops?
Well, as I said, between India and China last year, I think it was about 85% of total pea demand, rough numbers. And I think this year that will be the case as well. So the demand drivers from India are good. We'll have to see a little bit how China pans out for peas. They seem to be throttling back a little bit on the increases we have seen in the last years. But the year is not out, and I think on top of that, at least in theory, there's some feed potential for the pea side there, even at decent prices. So we'll have to see how that